Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 8th, 2025, and we're diving into Wendy's latest earnings report for the second quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Wendy's performance and what it means for investors.
Revenue and profitability overview. Let's start with the top line. Wendy's reported global system-wide sales of $3.7 billion, a decrease of 1.8%. However, international sales grew by 8.7%. John, can you explain these dynamics?
Absolutely. The decline in global sales is primarily due to a drop in U.S. same-restaurant sales, which fell by 3.6%. However, the international segment showed robust growth, with an 8.7% increase, driven by expansion and strong performance across all regions. This international growth is a positive sign for Wendy's global strategy.
And what about profitability?
Wendy's reported an adjusted EPS of 29 cents, which is a 7.4% increase from last year. This was driven by operational efficiencies and a successful share repurchase program, which reduced the number of shares outstanding.
Operational efficiencies and future outlook. Wendy's added 26 net new restaurants this quarter and expects a full-year net unit growth of 2 to 3%. How does this align with their strategic goals?
Wendy's is focused on expanding its footprint, particularly in international markets. The addition of 26 net new restaurants is part of their strategy to achieve 2 to 3% net unit growth for the year. This expansion is crucial for driving long-term growth, especially as they face challenges in the U.S. market.
They also returned $88.7 million to shareholders through dividends and share repurchases. What does this indicate?
This reflects Wendy's commitment to returning value to shareholders. The combination of dividends and share buybacks is a strong signal of confidence in their financial health and future prospects.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 25 cents for Wendy's, but the company reported an adjusted EPS of 29. What does this tell us?
This is a significant beat, with the actual EPS coming in 16% above the forecast. It highlights Wendy's ability to manage costs effectively and leverage its international growth to offset domestic challenges. Beating analyst expectations is always a positive indicator for investors.
CEO insights and strategic initiatives. Interim CEO Ken Cook mentioned the need to improve U.S. performance by strengthening franchisee relationships and enhancing marketing. How critical are these initiatives?
These initiatives are vital. Strengthening franchisee relationships can lead to better operational execution, while effective marketing can drive traffic and sales. Improving the customer experience is also crucial for retaining and attracting customers, which is essential for long-term success.
Do you think these strategies will pay off?
If executed well, they should position Wendy's for stronger long-term performance, especially in the competitive U.S. market.
Key takeaways. To wrap up, Wendy's has shown resilience with strong international growth and a solid EPS beat. However, challenges remain in the U.S. market. John, any final thoughts?
Wendy's is on the right track with its international expansion and shareholder returns. The focus on improving U.S. operations will be key to unlocking further growth. Investors should keep an eye on how these strategies unfold.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Wendy's performance in the comments below.